Good morning, everyone. It is Friday. It's January 23rd. Market's going to open about 30 minutes. Looks like we're headed toward a lower open, but who knows? Maybe it'll go lower or higher from where the pre-market numbers are at. Looks like crude oil is moving higher as well as gold prices. It's been a fairly positive week. We've had, especially yesterday, some good stock appreciation across some key companies. And the day before was a green day. Now we had a pretty good red day, I think on Tuesday. But overall, I think the market is beginning to show, I think, some healthy signs that some money's rotating out of certain sectors and into others. I think that's healthy because you're seeing, just, a movement of capital from one to another. Overall, I think this year we are dealing with a little bit of an expensive market. 3 years in a row we've had up prices, so we'll see where we end up. Kind of looking at different equity sectors. Materials did well yesterday. Communications did great, principally because Meta was up so much. Energy was up a little bit. Industrials were down. Financials were up. Staples were down. Real estate was down. Technology was up nicely. Utilities were down, and healthcare was pretty much even. And then discretionary is doing well. I think that's Tesla was up a lot. I know Amazon was up maybe a little over 1%. So that's where the sector ended up. So on this stream, we're going to focus on fundamental reviews of companies, taking a look at their businesses, seeing how they're growing, seeing if they have good cash flows, good profits, and trying to get to an intrinsic value of those companies. And we do technical analysis as well. And I should say that Daryl, my partner in crime, will be handling that. How you doing this morning, Daryl?
Doing wonderful, Victor. It's good to be here. Hello, everyone.
It is great to be here. And as mentioned, Daryl will cover the technical analysis, does a great job. He'll take a look at how stocks are setting up and what he expects is going to happen next, maybe some opportunities that we can take advantage of. So we've had a lot of earnings, and it's going to get even busier next week. But yesterday we had Intel announce their earnings, and as well as Intuitive Surgical and a couple of others. We thought Intel might be a good one to take a look at and see how things are happening with this big semiconductor company, historic company. As we had the PC build out happen coming out of the 80s and the 90s, Intel was like the center of the universe when it came to semiconductors for the PC build out. And today, the company is nowhere near the, I think, the stature, the power, just the whole overall strength. It's kind of become a pretty weak company within the space, and many companies have moved past it. But it might be a good investment. Who knows? Over the last 5 years, it's certainly been a rough road for investors, especially investors, frankly, like me, that really remember Intel for how great it was. But over the last 5 years, it's just been a real bad situation. The last year has been a really incredible rise to this company that was really beaten down. Today, the stock's trading lower on the announcement of earnings. And the earnings for Intel, man, they're so hard to read because it's easy to read when a company is trending higher or has a real logical trend. It's growing its revenues, and you see each year it's just getting bigger. It's taking over this market. It has a strategic plan, and it's, executing that plan. That's relatively logical to follow, right? You still got to do your homework and see where it's at. Intel, there's no logic to where the numbers go. Like you have numbers 2 years ago that are so different than the numbers today. So that's the hardest kind of company for me to value because what's going to happen next? I don't know. Well, I don't like being in that position when I'm putting my hard-earned money into a stock. I don't like investing and thinking to myself, well, I don't know what's going to happen. Nope. I stay out of it. There's nobody putting a gun to my head saying you have to buy this stock or not. But looking at Intel, let's take a look at some of their fundamentals. I've already prepared a valuation as best as I could. So we know what Intel does. They do semiconductors principally for the CPU unit in PCs. $271 billion market cap. As mentioned, it's really gone up 149% over the 1 year, but it's really a part of it was so beaten down that I think some news that is it Nvidia is going to invest in them and
NVIDIA, and yes, they did.
yeah, and they really rose nicely. Now Intel does separate itself from Nvidia, Broadcom, Qualcomm in the fact that it operates their own foundries and the semiconductor space. These companies brilliantly design these semiconductors for particular workloads. A lot of engineers, electrical engineers, computer scientists, and all these really smart people. That design part, all the semiconductor companies have. They design to a particular use case and they do a brilliant job. Most semiconductor companies nowadays do not produce their own semiconductors in a foundry. They go to TSMC. There they go to mainly TSMC. I think Samsung has a foundry. Global Foundries is out there. And instead, they're a fabless semiconductor company, and they go to those and they have the chips made. It enables Nvidia, Broadcom, and others to maintain really high gross margins because they don't have to get their hands dirty with all this capital that has to be put into a foundry and so forth. Intel is kind of one of the original semiconductor companies. They didn't have a lot of choices when they started their company, I don't know, 60 years ago. And they operate their own foundry. And that foundry is both a big asset, but it also kind of makes their margins look less desirable than if you compared them to NVIDIA. So that's one thing that's going on with Intel. Now, that foundry is a little bit of a strategic asset because in the US, we do want more jobs to stay here in the US, and those foundries are here. So, looking at their numbers, the most recent quarter, they contracted, and they're expected in 2026 to not grow. They're going to be fairly flat. That's not good. Some positives I'll show it on their earnings announcement is they are growing in the data center. Their foundry is growing as well. So they have a gross profit. The gross profit is decent, but not as good as Nvidia, not as good as Broadcom, not as good as Qualcomm. They are producing free cash flow. The cash flow is good that they're producing it. Historically, Intel was a cash producing machine. It was just awesome to see the cash flow they produced because the PC business became really profitable for them. But nowadays, it's not the case. The gross margins are only 36%. If you looked at a Nvidia, you're up at 75. So that's a big difference in speaking to, or I should say, referring back to what I mentioned earlier, which is they operate their own foundries. It makes their margins look different than what you would see in an Nvidia or a Broadcom. So that's, their financials are not impressive. Their balance sheet is carrying more debt than I like. They have been putting a lot of money into their operations and their foundry. And part of it is the government, the US government wants them to keep doing that. So they are getting some support from the US government, subsidies and stuff like that. So analysts think this one's priced too high by 27%. And let's take a look at the forecast. Now, the forecast long-term looks better. Okay, so this year, 2026, especially Q1. They're guiding that they're not going to have any growth in Q1. Forward PE looks a little expensive, and eventually it's going to get back to where it should be, which is below 25. In the high teens would be pretty acceptable. If they could accomplish this, get back to good profitability and cash flow and growing by 15% a year, their stock's going to be all right. But one thing Intel has been for the last couple of years, it's been really unpredictable. Right when you think they got it figured out, they just need to execute, they fumble. They just surprise us. And that is not good. That is not good at all. All right. So looking at their earnings announcement, just real quick. So here's the Intel earnings announcement, and they were down year over year. Not good. Not good at all. Read through it. A couple of things I'll point out. The data center, right? Data center is super important. That's where the money is being made these days. And their revenues are up by 9%. That is good. Also, their foundries become kind of one of the things that makes them, good to work with here in the US. I think that's one of the reasons why NVIDIA wants to partner with them or invest in them is they have this foundry. And the US president, I think it's a good idea to really push these semiconductor companies to have some jobs here in the US. That way we can create some good jobs. It's up 4%. So that's good stuff. That's good stuff right there. So it'll continue to make Intel a company that businesses want to work with. So I updated my analysis on Intel, and let me revisit it because I went over it this morning. I just had another cup of coffee, and let me take a look here. So their growth rate, yeah, I'm good with that. Now, this is where art and science, investing is art and science. It's not like, hey, it's really easy. You just do this, that, and the other. You got to really do estimates at times. And Intel, boy, it's a hard one. But looking at their historic numbers, I think a good starting point would be like $7 billion of free cash flow. I'm using a higher discount rate because it's a riskier stock. Again, they've surprised us quite big over the last 2 years. Like there's been some big surprises. So you know what? We'll see when they stop surprising us, maybe a year, 2 years of consistency, do what you said you were going to do kind of behavior, and then I'll lower that discount rate. So for now, it's going to be 8.5, or it's going to be higher than what I would use with a low risk company.
Quick question for you.
Yeah.
Their free cash flow now is actually negative, right?
Mm-hmm.
Okay, that's what I thought.
Yeah, and that's where I said is this number
So
is my estimate. It's my estimate. Why? What am I doing to get to that estimate, right? Well, if we look at Intel, I'm going to focus on the free cash flow line. Here's the free cash flow line. Intel, when it was clicking, 12 billion, 10 billion, 14 billion, 17 billion, 21 billion. These are really, really good cash flow numbers. And at that time, Intel was one of the most valuable companies on the stock market. But since then, it's just been kind of a real painful existence. And some of this has been foundry investments, but some of it's just been the business has been poorly operated, or they've been outmaneuvered by their competition. Let me get to the free cash flow line. Here it is. So in 22, negative. And okay, that's the problem there, right? So 7 billion is well below. If you look at their back when Intel was just, Intel, well below those numbers. It's not going to be negative forever. I think temporarily, if you look at their free cash flow statement, they're putting a lot of money in those foundries. Well, they're not going to put money in those foundries forever. Once they've got them built out, they're done. I think they're putting a foundry in Ohio, and that's really consuming a lot of capital. And they're not going to have to build it like every year. They're going to get done with it, and then the free cash flow is going to come back. So it's an absolute estimate on my behalf. And that's where, I'm making my best estimate and putting that number as the first year for my cash flow. So good question. I'm glad I clarified it because most of my other evaluations are based on trailing 12 months. It's the data that the
Right.
company's producing. All right. Numbers that are real are the cash and the debt. They have their debt has gone up. They're trying to fund that, the foundry investments. So it's still priced too high, 41% too high based on cash flows. And it's priced too high based on earnings per share. The earnings per share are going to grow really fast, but it's still, you know, you, we got to have rational investing, or I like to follow rational investing, which is okay. You're making this amount of profit. You are going to grow fast, but I still think, you're priced way too high. So Intel's priced way too high. That big run up in the stock is all story, based. It's all, hey, here's the story on Intel. I'm moving in. It's really discounted. And so far, those investors have been right. So congratulations if you invested in Intel. It's just not how I invest. I invest with fundamentals. And in most cases, I get it right, which is if I invest in 10 companies, seven, eight of them reward me with good gains. A couple of them lag, and I try to find those, get them out, or maybe make smaller investments in those. But it's all based on fundamentals. If I find discounted stocks and I pick them up at the right time, I make money. Speaking of the right time, let's kick it over to Daryl to see what the charts look like for Intel.
So I have a similar valuation as you do. So I don't understand this rise they've really had since basically August, middle of August. They did have the U.S. government take a stake, and then Intel made an investment as well. And they have had a run. If I just pick a date here around the 15th of August, they're up 122%, and it boggles my mind a little bit. The 200-day had been declining, flattened out, and started moving back up somewhere around the middle of September and has been on a steady uprise. The 50-day is also still rising. It did level out a bit in December, but it is rising at the moment. The 21-day is also rising, and I took a contrarian view on this because on the 2nd of January, up to their earnings, they were running higher, and I was scratching my head trying to figure out why. The RSI is in overbought territory. The PPO has been on a buy signal since the 2nd of January, moving towards the earnings. The accumulation distribution has pretty much been in distribution. We can see from the money flow, they've spent the majority of their time in negative money flow. So on Monday, I put out a video this weekend, and I said I was going to buy a put vertical on them, a bearish put spread on them. And when I look at their pre-market price, they're down 11.84%, $6. So that put spread's going to pay off for me this morning.
Great.
I'm going to hold on to it for a few days because I don't think this downturn is over. I think they'll continue to drive lower, even though nothing was telling me that that was going to happen going into the earnings. I just had my own intuition there because I thought they had gotten way overpriced.
Yep.
We look
I
at
agree.
Yeah, if we look at the chart intraday with the extended hours turned on, you can see they're trading around $47 in the pre-market.
Yeah, I think that behavior we're seeing is because so many speculators are in the stock. So good stuff. What else on Intel?
That's it. We'll see how that put spread goes after the market opens and things settle down a little bit.
All right. Mike's got a tip for me, which is what's going on over with Fortnite. So let's chase that down there. Up 6%. What's going on? A long term bullish trend line could help Fortnite stock break out. Really? That's 7 days ago. So that's old. What is going on with Fortnite? You have any idea there, Daryl? Let's put on our forensic investing hats on. What's causing the stock to go higher?
It's a good question. I don't see anything in the charts.
Let's put on our CSI Miami hats on. What is going on? Well, I've been in the process of selling Fortnite and buying Okta. Still own a few shares. I dollar cost average in, I dollar cost average out. What is the story here? All right, Gemini. Let's bring Gemini into the game here. See if Gemini. It's been, really useful at times.
Yeah, I've been using it a lot more. I think
And
it's
this new feature, you open it up and I think I had to opt into it. It look at the current page you're on. See how it's put this blue circle. So it takes that into account
yep.
and it does a pretty good job. So this is what Gemini is saying. Fortnite stock is surging today, up approximately 6% in the pre-market and early trading on Friday. The primary driver is a significant analyst upgrade, positive sentiment regarding the company's 2026 outlook. All right. So, yep, there it is. TD upgrade. Wow. Interesting. All right. So it looks like we've got a good group of people on. Thanks, everybody. And the chat messages are coming in. Keep them coming. Let's get all over this market, see what's going on. And looks like Peyton is on. Good to see you, Peyton. Yeah, software stocks had a good day yesterday, but they've had what I'm going to call is a pretty rough 3-4 weeks. It's been rough out there. GitLab surged. I think there was a little bit of I'm gonna keep Fortnite open. Maybe we can take a look at Fortnite later. But so GitLab, I think there was some kind of rumor that they may be an acquisition target, which I wouldn't be surprised because these guys are making money, they're growing, they're really small. So I think there was some kind of rumor that these guys were potentially going to be acquired. Um, and it went up 12.8%. Really nice day. For the year to date, it's not even breaking even. And the software stocks just been hammered over the last year, over the last couple of years. The whole AI threat. Oh, AI is going to replace these guys is what's causing that big sell off. I don't believe it, but the market's going to do what it's going to do. It's going to take its time to verify, validate, prove that either AI is going to really badly affect GitLab and other software stocks or it's not. And that's where what we're going to have to follow. All right. Okay, so yeah, Fortnite's just been getting hammered. So we'll keep an eye on it today. All right, good to see you guys. Keep it coming. Keep the chat messages going. See what you guys want to talk about. The other stock that I wanted to take a peek at is Intuitive Surgical. This is a healthcare stock and really innovative. They have a Da Vinci robotic surgical um, platform, and what they're able to do is complete these really non-invasive surgeries. It's a great thing, right? Somebody needs a surgery, they can make a very small incision, get into the body, do what needs to be done, and then you're good to go. Oftentimes surgeries, it's not necessarily the actual surgery or what they did. Like, I'm not a doctor, but let's say they need to take care of maybe a clogged artery or something. Well, it's not necessarily that they got to that artery and that artery needs to heal. It's historically the incision that they created and the wound could get infected. A lot of things can happen. So if they keep the wound area as small as possible, it really helps that person recover much quicker. So Intuitive Surgical has a platform. They call it the Da Vinci surgical platform, and they've been growing nicely. Investors have liked the stock. Now, I've called out that it's too expensive, and I've been saying it's too expensive. And so far, I think it's been logical to state that. Um, I didn't, I think when I did videos on these guys a year ago, I would get a little bit of pushback like, hey, you know, you don't get it. And I would quickly volunteer that I'm not a doctor, I'm not a surgeon. So there may be some other people, investors that do get it better than I do. But I do understand numbers, and the numbers just got a little too heavy for this stock price. And voila, it's down 13%. It's having a good pre-market, 2% higher. Let's take a look at what's going on. Market cap 186 billion, forward PE 52. Analysts think it's discounted. Now, I think it's phenomenal what they're doing, but it's all about what kind of business are we buying. Sometimes there's some businesses that are not very interesting, fantastic, kind of like, they capture the imagination of society and all that stuff. They make a lot of money. And those are the stocks that, I don't mind holding. These guys make money, but they don't make a lot of it. Let's take a look. So the free cash flow, this has been my biggest I think area of concern. So Intuitive Surgical has been really successful in rolling out this product line. Super successful. And they've been helping make surgeries more successful. Their cash flows have not been growing. What gives? Okay, you figured this thing out. You've released your product. It's a product that's been well accepted by the market. Why aren't you growing your cash flows? You should be growing your cash flows. So that's been the main area of critique from me. Gross margins are okay. And they do get to charge some services fees and so forth, because this platform, you have to keep it perfect. It has to run perfect. And their profit margins are very good. Okay. Got no complaints here. Got no complaints here. My complaints are here. It's like, why is your cash flow, lagging? As we look at the forecast, the business did well this year, and I've got their earnings announcement. We'll take a peek at that in a bit. And looking forward, looking through that windshield, they're going to grow it, and they're getting bigger. So this is a logical decrease in the percentage. This is not a problem. This is just reality. As you get bigger and you start comparing to bigger numbers in your history, your percentage growth is going to come down. That's not a problem. They are expanding their profit. Very good. But their PE ratio is too high. Okay. I get that Intuitive Surgical is doing cool stuff. I get that they're successful. But I could buy really successful businesses that make more money, like Meta. I could get Meta for 20 PE ratio. They're growing faster than Intuitive Surgical top line. They make 82% gross margins. They cash flow like it's, just incredible cash flow. So my alternatives for my capital just go elsewhere. It's like, I'd rather buy Meta. I'd rather buy other businesses that crank out better profit, better cash. And my PE ratios are not way out of whack. So this is not a discounted stock. This is not a stock that is set to attract investors that are looking for terrific numbers that are going to reward them. So I went through their earnings release and just pointing out the more important parts. So first, they grew in the fourth quarter by 19%. That's pretty good. That's very good. It's a pretty good sized business, 10 billion. The other pieces to it, they're guiding 2026, and they keep referring back to the Da Vinci procedure, which is cool. That's like 90% of their business. And it doesn't give us a clear, complete business kind of growth, but that's all right. That's most of it. They're going to grow up by 13 to 15. They may be sandbagging a little bit. So they're going to grow. I'm going to say they're going to grow about 15%, which is fine. And, last year, the Da Vinci procedure grew by 19% or 18%, excuse me. So, the other thing I like about this business is they're very predictable. They're doing what they said they were going to do. They're getting things done that they said they were going to do. So those things are positive. And I think investors really like that. They should get credit for that. I went over Intel and my complaints that, hey, those guys have surprised me too many times. So I kind of got them in the doghouse of, well, I can't believe everything you're saying until you start doing what you said you were going to do. And these guys, even though I believe everything they're saying, I give them a very positive, enthusiastic evaluation. Okay. This is not I'm looking for ways to make this stock look cheap. I'm actually giving them the benefit of the doubt on each turn, because this is a pretty high free cash flow number that I'm using. It's their trailing 12 months. As of the end of Q3, they haven't released their Q4 numbers. And I'm growing those cash flows faster than the revenue growth. Even when I do that, the stock's priced 42% too high. Back to that free cash flow line. If you look at for the last 8 years, the difference in cash flow isn't very dramatic for them. It's almost the same. It's like, guys, what are you guys doing? You make great products. You're revolutionizing surgeries, but you're not making more cash. Cash loads the balance sheet. It enables you to be stronger. It enables you to pay a dividend. They haven't grown it. So maybe they got to hire a new CFO, help them better manage that cash flow, because their free cash flows do not support this stock price. It's 41% too high. And back to the old PE ratio, right? Well, investors are willing to pay a very high PE ratio for Intuitive Surgical, but this investor is not. I'm going to go with 25, which is a good solid number for a growing business. If I'm going to hit Meta with 25 PE ratio, I'm hitting this one with 25. I've got a lot of businesses I could buy that look better, that I'm giving them a 25 PE ratio. So it's getting a 25 PE ratio. So I am willing to pay this amount. I think this is a very good value for the business, and it's priced 47% too high when I compare the stock price versus the value of the stock based on earnings per share. So Intuitive Surgical, I really like what they're doing, but I think the stock price is priced too high. Let's kick it over to Daryl and see what he's seeing on the charts for Intuitive Surgical.
Johnson & Johnson also submitted their surgical robot for FDA approval in the fourth quarter. So they're going to have some competition here pretty soon.
Just one tip for Johnson & Johnson is don't make your robot look like the Terminator because nobody's going to want to use it. So, back to you, sir.
So they jumped up on the 21st of October. I presume that was their last earnings date, if I was guessing. And they traveled up even higher, getting up to about 580 or so. They traveled sideways, had one more push higher, and then started on a little bit of a downtrend. So I have these two red dotted lines as resistance at this point. I think this gap would be support. So that's at around 463. The 50-day is turning down. The 21-day is turning down. They're not much above their 200-day, which would also be support. If it breaks down through the 200, then this gap could potentially fill. But this will be their first support line, about 514 or so. I immediately saw that prices were going higher. RSI was going lower. That's called a bearish negative divergence and usually leads to a downturn at some point. We also had the bearish negative divergence on the PPO, and it has finally gone negative, the PPO, so it's in bearish territory at the moment. They had been holding the RSI 40 lines since, well, got to bring it back a little bit, about the 22nd of September. So they had dropped below the RSI 40. They're also have dropped below, almost got to over sold territory, but not quite. So at this point, I would need to see a break above the 40 and preferably the 50 line before I could call this few days of upward rising prices. Before I could call that, it wouldn't be a head fake. Money flow is neutral at the moment. So they're on a sell signal. Let's look at make sure I save this. We'll look at the weekly. They are also on a sell signal as of the 12th of January. The weekly RSI is currently at 50.5, and it was 50.8, so it's evidently dropping this morning. So this one would kind of be a wait and see what happens.
Yeah, and some of these businesses that are so impressive in what they're doing, right? And in the case of Intuitive Surgical, I am super impressed. Like, man, you create these robotic systems, and what they do is awesome. Okay. But I like I'm wearing a pair of Nikes. I just got them this past weekend. I really like them. Great. I don't have to invest in the stock. Okay. I can like a company. I could think they're cool. But what I need to invest on is fundamentals, and Intuitive Surgical, just their fundamentals don't line up. And I will continue to use my investing recipe for success. It's been a winner. It's taking decades to get there, and I'm going to keep using it. So I got a lot of requests coming in. It looks like the latest one is from Dre, EW. Okay. And just to give you a sense, Dre, you're fourth on the list. We're going to look at IoT. Looks like DJ's out there. CNTA, and forgot who. Ben 10. Good morning. And then we're going to look at AMD. Mike is saying that, yeah, absolutely. AMD has been flourishing. They're hitting the 52-week high. I think I had this set up here. These are some semiconductor stocks. Intel up 151, NVIDIA up 25, Broadcom up 35, Qualcomm is lagging. Look at AMD. Beautiful. Looking good. All right. So looks like Mike's got something to add here. Let's take a look at Wix and Monday. And software stocks, I did take a look at the heat map. They're going up today. So, man, I just don't get how logical and sometimes illogical the stock market can be when it comes to some businesses and software businesses. We're going to look at Wix. We're going to look at Monday. When we look at those margins, I'll point out what I really like about that. Software space is looking good. So I think when we get to Wix and Monday, we'll see if they're green. Look at all this red here. What is going on? Hardware, and then the whole, this is semiconductor equipment and materials is down quite a bit. Broadcom is down. Apple's down. Looks like Google and Meta are up. Netflix is higher. Amazon is higher. All right, energy. Now, here's what's interesting about energy is the last time oil prices were really nice and high, the stock market had a bad year, 2022. And it's I think I could go back historically and show every time you have very high oil prices, the stock market drags. And you oftentimes are hit with a recession too. It just really takes away disposable income from the consumer. It does a lot of bad things. Businesses have to spend more on oil, crude oil, because there's so many products made with it. So we'll see. Right now, it's not that expensive. Okay. Low 60s is relatively over the last 40 years. That's a low oil price. Nothing to worry about for me at the current time. All right. So that's what's happening. Let's take a look at the list of the most valuable stocks. So it looks like NVIDIA is up nicely, 1.43%. Looks good. Google's up a little bit. Apple's down a little bit. Broadcom's down. And remember, I was talking about Intuitive Surgical. Meta is, I think, priced really well. And if I didn't own so much, man, I'd be buying more Meta stock. It's a good buy in my book. So we'll see how it plays out. Okay, so let's go over to the next stock we're going to look at, and that is IoT. That's Samara. These guys do IoT being Internet of Things. They do Samara provides solutions to connect physical operations data to its connected operations platform in the US and internationally. The company's connected operations platform includes data platform, which ingests, aggregates, and enriches data from its IoT devices, and growing ecosystem of connected assets, third-party systems, and which has embedded capabilities for AI workflows, analytics, alerts, API connections, data security, and privacy. Okay. So taking a look at their website just real quick. So you have all these machines like this crane, and you can put or this ambulance, and you can put sensors on those assets, trucks. You put those sensors and you know where the truck is at any one time. Is it traveling at 52 miles an hour or 72 miles an hour? What's that driver doing? We got to talk to him. You got to slow down, that kind of thing. It could be machines in a factory. Are those machines running too fast, too slow, too hot, too cold? Those types of data pieces enable whoever owns that asset to operate it better, faster, quicker, and make it last longer. So that's what Samsara is doing, Internet of Things. Over the 1 year, it has not been a good stock. Over the 5 year, it was doing well for a while, but guess what? It just really has struggled for the 1 year. It probably was caught up in, hey, this is probably going to be an AI stock. But then once, investors realize, well, not really, it really sold off. So it's been struggling. Market cap 18 billion. Forward PE looks a little expensive. We'll see how they're growing. If they're growing fast, that got no problem with that PE being at 57, but you better be growing fast. Analysts think it's discounted by 58%. Taking a look at their financials. And before I do that, they're going to announce on March 5th. All right. So it's not around the corner. We're actually about a month and a half from that happening. Looking at their growth, the growth is pretty impressive, 29%, $1.5 billion revenue company. So I like that growth. That's a pretty good growth number. Let's look at their overall gross margin, 77%. Hello, I'll drink to that. That's a very good looking number. And they're not making money yet. They're relatively a young business. Free cash flow looks okay, and they have been growing it. This is what I like to see when it comes to cash flow is as you get bigger, your operation gets established, you start cranking out free cash flow. That is logical. Nicely done. Looking at a forecast for Samsara, analysts think, man, this thing is highly discounted. It's been beat up. It's been sold off. We're in the year that's going to end, in about a week. Yeah, about a week and a couple of days from now, February 1st. And for this year, they're growing at 29%. As you get bigger, this percentage growth is going to go down. But these guys are supposed to pick up their growth in a couple of years. Okay. And their profit is not growing all that fast. So that is interesting. Okay. Their P ratio is going to stay elevated. So I like their growth rate. I think the growth rate's good. But man, there's a lot of businesses out there that I could buy with far lower PEs that look better than this. The growth rate is there, kind of similar. Profitability is better and gives me a better lower PE ratio. The balance sheet, I think, is good with these guys. Samsara, $761 million cash, lots of cash, very little debt. Looks good. I think I have a valuation for them. I'm not certain. So let me kick it over to Daryl and I'll double check, update it. Then we'll come back to a valuation on Samsara. You there, Daryl?
It's pretty slow this morning. I think I'm having to. Yes, can you hear me?
Yeah, I think your internet's a little slow this morning.
Yeah, it's a little slow this morning. My computer is as well. I think I need to restart it. Let's go back a couple of years. Yeah, it's very slow. So I have a support line here that's currently resistance, but that's from 5 August of 2024. I think that was the Japanese yen carry trade. Come down and tested it again in April 2025 during the tariff announcements. It came down and tested it in August, and it is currently trading below that. The 200-day has been declining. It looks like it may be leveling out, but they are definitely on a downtrend. We have this downtrend line here, so breakout above around 42 or so would definitely be beneficial. The 50-day is declining. The 21-day is also declining at a pretty stiff rate of change. The RSI is below 40, sitting at 33. They've been on a sell signal since the 19th of December. Money flow is currently negative. So I don't see any signs of it slowing down here. So the next level of support would be somewhere around $28, I think.
All right. And I'm going to get into my evaluation. I'm going to complete it. But Daryl, I've got an idea. Why don't you reboot your system and then
Okay.
rejoin, and hopefully that kind of helps out because it's really disrupting what you're saying, and it's hard to make out what you're expressing.
Okay. I will do that. I'll be
Thank you,
back in
sir.
about 5.
Awesome. All right. So in the process of updating Samara, and I was right in the middle of updating their cash, 761.84. They have a little bit of debt, 75.64. And I'm giving Samsara a pretty good, meaning positive, enthusiastic valuation on cash flows, expecting that they are going to continue to grow. I like that outer growth number. I think in 2 years they're going to grow at 25%. So that looks good. And they're going to, I think Internet of Things is something that's going to grow for a long time. So I'm going to go with a 5% growth rate on the terminal value versus 4. Now let's take a look at earnings per share. Where are these guys going to land for the next full year, the next full 12 months? And that is the fiscal year 2027, 59 cents per share. So let's put that in the model here. Now, PE ratio, they're growing nicely, but got to kind of cool my jets there. And the growth rate of 20%, yeah, it's fine. So Samsara is just too expensive of a stock. And I cannot argue with the market selling this one off the way it sold it off. It's just, it's a good business, but it's priced too high. And would, you know, I would love to buy a business like Samsara. I think it's a good business, but you have to give me like a nice discount, 25, 30, 35% compelling discount. So we are a ways away from this being a good investment in my eyes. I think it's just priced too high. So thanks for asking about that. And that's the valuation on Samsara. All right, so let's keep moving here. We got a lot of stocks to go over. Before I jump in there, let's take a peek at that stock market. What's going on? What is going on? Looks like we have a Dow sell-off. Interesting. And I think Intel is part of the Dow, so that might be part of the problem there. S&P is down a little bit. NASDAQ is pretty much flat. All right. And we looked at that. Let me look at what's going on with oil. And it's not there anymore. Okay. I'll look at it later. Looking at different sectors out there, materials down a little bit, communications up a little bit, energy, that's where it's at. Oil prices are higher, so energy is really booming today. Industrials are down a bit, financials are down, staples are up a bit, risk off, real estate down a bit, technology is down, utilities down, healthcare down, and discretionary is down. So not a big positive day, but I don't think it's a horrible day. The NASDAQ is close to flat. So just a couple green boxes out there. NVIDIA is doing well. Palantir is doing well. Some software stocks are doing okay. ServiceNow is doing well. Meta, back-to-back good days. I can go for that. Amazon is up. Energy space is up nicely. Procter and Gamble and other staple stocks are doing well. All right. Looks good. All right, let's go on to the next stock. The next stock is CNTA. It's a little bit of a like opening a gift here because I'm not sure what this one is all about. Centessa Pharmaceuticals. Never heard of this company. Small cap. 3.61. Revenue, $15 million. So these guys are new. No profits. All right. What are they doing? What kind of treatments, pharmaceuticals are they coming out with? Looks like these guys came out, IPO'd, stock really sold off, and it's really been rising nicely, coming up from $3 a share up to 24. Hello, that's an 8-bagger. Congratulations if you've been in this stock for a long time. That looks really good. Over the 1 year, it's been doing great, 50% rise. And they are trailing 12 months, 15 million. It looks so the quarterly tells me a lot, which is they're not really in the commercial phase for their pharmaceuticals. And let me read their Centessa Pharmaceuticals, a clinical stage pharmaceutical company, discovers, develops, delivers medicines. Its leading clinical stage program includes RX 750, an orally administered agonist in phase 2. So they're treating hypersomnia and narcolepsy. Okay. Okay. So they're treating these conditions that people deal with. It looks like Daryl is back. Good to have you back, Daryl.
Thank you.
All
Hopefully
right.
that
So
helps.
yeah, I hope so. So Centessa Pharmaceuticals. So people that have trouble with sleep, wake, neurological, neurodegenerative, neuropsychiatric disorders. All right. So we know what the general area where they're operating in. This is pre-revenue, if I'm understanding it correctly. Let's take a look at, and all right, Gemini. You're back in the game, Gemini. When will So I'm asking, okay, when are we going to go into the commercial phase of Centessa? So Centessa Pharmaceuticals, they're clinical stage. We know that. Okay. They're applying for FDA. So here's the estimate of their timeline. Okay, so if they're phase 3, it could be a year, 2 years, 3 years, depending on how quickly it gets approved. Let's take a look at the forecast. So the forecast is saying we are years from it happening. We are in this year. Okay, and they're getting some revenue. It might be that they're doing some collaboration with another pharmaceutical company. They're getting paid kind of a service fee for doing that. But it looks like the investor community, the analyst community is saying they're going to start cranking out some revenue in 2 years, closer to 3. So this one here is they're probably getting good news on how the clinical trials, the FDA process is advancing. So here's they're getting So that has nothing to do with it. Okay. So this one here, I can't put a valuation on, no revenue. It's, if you feel like the addressable market is big enough and you think, hey, they're solving a problem where they could become $1 billion revenue company. Okay, that's something. I don't have the expertise to be able to do that. I've got to see some numbers on financials, and I'm not seeing them, so I can't get you a valuation here. This one's I would say a high risk stock that could really be rewarding, but it could also be quite destructive to capital because if they have a problem in their whole FDA process, like you've seen before, it went from $24 a share down to $4 a share. It's back up to 24. Well, absolutely, it can go higher, but it could also go lower like it's done before. If they have competition come into its space, the FDA doesn't like what they're doing, there's a problem with the pharmaceutical, there's some adverse reactions, a lot of things can come up that could hurt the company and hurt their timeline. So for me, I would not be an investor in a company like this. It's just not the investment I want to make. But if you're a doctor, if you're a scientist and you understand the science, you have an advantage. Maybe that's who you are and you're able to see that. If you're able to really gauge it better than most investors, you might have an advantage. So that's what I've got to say about Centessa. Any comments your way, Daryl, that you have on Centessa?
So the 200-day is increasing. The 50-day kind of stalled out, is decreasing a little bit. They are trading above their 21-day moving average, which did turn upward. So the last 2 days, they've been trading above that 21-day moving average. They did come out of a condition where they were below the 40 on the RSI. They have moved back above 40, above 50. Looks to be leveling off a little bit today. We do have a buy signal in bearish territory on the PPO. Money flow has been negative. It's now in more of a neutral state. Once again, let me just annotate this because this is really important stuff here. Look at the negative divergence on both the RSI and the PPO. So it was pushing towards higher prices. So there's going to be a point when it's going to start stalling out. And sure enough, you see that. So I had not followed this one ever before, but this is one of the first things I would have noticed and tightened up my stop losses on this one. But it is in a buy condition at the moment. Let me save this and go to a weekly view. I don't think it's probably in a buy condition yet on the weekly view. So we're still in a sell since the 8th of December. The money flow is positive. The RSI didn't drop below 50 and it is turned back up at the moment. So it looks like you could probably step into this one. Just keep your stop losses really tight would be my recommendation.
Thank you, sir. All right, let's talk a little AMD. AMD has been flourishing up 112% over the 1 year. Hello, doubling your money in 1 year. Really, really good stuff. Market cap's gotten up to $428 billion. And the P ratio, forward PE is 47. Analysts think it's getting a little expensive. The forecast for AMD, that'll be really interesting to take a look at. How is their growth expected? It's going to be really good growth for a while. We've got 2026, we're supposed to grow by 32 and then 39, 28. I mean, these are terrific numbers. P ratio is going to drop to the teens in 2028. So we've got a couple years of this business doing really well. Now AMD does have good data center products, and it's probably going to be able to compete against Nvidia from a price perspective, right? They can provide GPUs, and maybe they're not as the performance isn't as great as Nvidia, but boy, you can buy it for a fraction of the cost of an Nvidia GPU, and I think that's going to be a pretty good proposition to companies that are looking to get more compute, get more advanced high performance compute in the data center. So those things look really good for AMD. The growth looks fantastic and everything looks good there. Let me take a peek at their valuation. So AMD is discounted by 16% in my opinion because their growth is so darn good. Its cash flows are worth a lot. Its profits are worth a lot. Its PE ratio, I think I got to price it higher because it's supposed to drop to those teens because of its growth. So AMD is looking pretty darn good. You know, its numbers, in credit to them, they have really put their business in the right place. Um, they put their business right in the middle of the data center. That's good. Right in the middle of the AI move. That's great. And looks like the stock is doing great today and is outperforming the market by a pretty good margin over the last year. Congratulations to those that own AMD. Let's kick it over to Daryl and see what he's seeing on the charts for AMD. And by the way, your internet's working much better.
Okay, thank you. I'm glad to hear that. I could tell it was working a little better. So we had looked at this one before, and we had some downtrend lines, and you can see that they've successfully navigated above those, had a real strong breakout on the 6th of October. And they went ahead and traded a little bit higher and then had the sell off that we saw in October and November on the high tech stuff. And they are trading higher now. The 5 day is moving up, the 21 day is moving up. It's crossed above the 50 day, which is also turning up, and the 200 day is also increasing. So you have all of the moving averages in the right order and heading in the right direction. Unlike the bearish negative divergences that we had seen, this one was running higher and the RSI was getting higher. So that was good going into this move. We did have a little bit of digestion after this run, traded sideways, and it looks like we're moving back up. They need to break above this 267.08. If they can sustain that, today's Friday. I usually like to see them sustain a break above previous resistance for a couple of days or till the end of the week, and this will be the end of the week. They are overbought on the RSI. The PPO did get into negative territory during November and December. We did get a buy signal back on the 22nd of December, and it looks like the divergence between the 12 and the 26 and the signal line is getting larger. These histogram bars are growing larger. So the price action is definitely positive at the moment. I'm seeing pretty sideways accumulation. It doesn't really seem to be getting a lot of steam in the accumulation. So I think we may be reaching a top here. Money flow is currently negative. So if it can break out above this 267, you might be able to run a bit higher. If it fails to hold this, then you may come back down to the 50 line or so.
Thanks, Daryl. All right. So Edwards Life Sciences, EW. And I was right in the middle of their valuation, so let's just stick to it. I'll just kind of finish the valuation here with you, and then we're going to get into the fundamentals. So, Edwards Life Sciences is a pharmaceutical device company. They're probably well known for doing a lot of heart related devices, pacemakers, all kinds of stuff there. And they are headquartered, I would say, about 5 miles from where I'm sitting. I've known of the company that long because when I was a kid, one of our neighbors worked there. So that's how I knew Edwards Life Sciences way back in the day. And of course, they've been a really good company. Now, looking at their valuation, I'm looking at a screen you guys can't see, but let's keep rolling on here. I was right in the middle of updating their balance sheet items. And their cash on the balance sheet, $3,840,000,000, and their debt is $700 million. Now, I'm not getting there because their cash flow is good. It's been growing. They're growing by 10%. That looks really good. And it just doesn't crank up the intrinsic value of that cash. So when we compare it to their market cap, it is not getting there. Over the 1 year, this stock is up 20%, but it hasn't been a winner over the 5 years. It's actually down 3% over the 5 year. Now let's take a look at the earnings per share. And the earnings per share for 2026, it's expected to be $2.96. It's a 10% growing business. It's not the most profitable business I've come across. So these guys are just priced too high by 34%. There's lots of healthcare related stocks that I can get better pricing on. So for me, Edwards Life Sciences would be a sell. I like the company. They're a company that's in my community, like the county that I live in, and I'd like them to do well, but I just got to be rational with the numbers, and I just think they're priced too high. And they're a business that's not going to create a ton of value for investors. Over the 1 year, it's up 20%. It doesn't pay a dividend. That forward P is a little high, and analysts think it could go higher. So they're basing it purely on earnings per share. Let's take a look at that forecast together and see what this one looks like. Are they going to accelerate their growth? No, they're going to grow really well. 10% growth near it is really good. They're going to get up to about a $10 billion company, and the earnings per share growth is looking a little better. That looks good. It's going to drive down their PE ratio to the 20s, but I think I'd rather invest in other companies. There's too many good choices out there, especially in healthcare, which hasn't seen a run up like we've seen with some sectors. I just think there's too many good choices out there, and I'd rather pass on Edwards Life Sciences. What do you think, Daryl?
Last time we looked at this, when we created this trend channel, which they basically established back in the August 2024 timeframe after a pretty sizable drop, and they've done a very good job of remaining inside of that trend channel since August of last year. They're trading in the upward half of the trend channel. The RSI floating between 40 and 50 at the moment, looks to be decreasing a bit this morning. The PPO is relatively flat and has been stalling a bit as we've been consolidating since basically the end of October. The accumulation looks really good. We're pretty much at this is a 2-year, so we're at a 2-year high. And the money flow was positive. It's now more neutral at the moment. The 21 day is decreasing, the 5 days increasing, the 50 days increasing, and the 200 day is increasing. So if things hold up like they have since last August, you can probably expect to trade within this trend channel.
All right, looks good. let's move over to Wix. And Wix is a company that provides software, and really it's a software as a service, so that just about anybody can create a website, whether you're a dentist, an accountant, you have a small business, or maybe you just have a hobby or a group that you're maybe attracting more and more members toward. And they are a business that, the whole AI is going to really replace, disrupt these software companies. That story, I think, is what's holding this stock down. 62% drop, 5 year 64%. What gives? Because this business, it's a $5 billion market cap. Its forward P is only 13.47. It's a strong buy with 103% discount. It keeps growing. So where is this AI disruption? I don't see it. They're growing their top line revenue. It's not disrupting Wix. It's not like AI can magically make you create a website, host it, do all these things. It's like, I just don't see where AI is disrupting them at all. But what I am seeing is this business is growing. This business has gross margins of 68%. It's profitable and it generates a lot of free cash. I like that free cash. When we look at a forecast, is it expected that it's going to get disrupted in the near future? And the answer is no. We are just completed the 2025 year. We're going to grow at 14, 13, 16. No disruption. Where's the disruption? This is a fantastic company, discounted big time. Its P/E ratio is super low. Super low. It's got good profit. It's got, a lot of good things going on with it. Let's take a look at the valuation. Valuation, as you might expect, is going to look fantastic because it's just a really discounted stock. And I was right in the middle of updating the earnings per share numbers on Wix. Let me finish that off. I'm referring over to a screen you guys can't see. So what is the expected earnings per share for 2026 is $6.86. And so a 24 PE for a company that's their type, their revenues, it's growing at 15%. So this is a really discounted stock. When the market confirms either way, and if it confirms AI is going to disrupt these businesses, then I will tip my hat and say, stock market, thank you for the lesson. But I'm 80% sure that we're going to wake up in the future at some point and confirm, no, AI is not going to disrupt these software stocks. It's in some cases going to make them better, stronger, faster, more profitable. In some cases, it's going to change them a bit. But I think Wix is going to be a fantastic opportunity. But I don't know when the stocks are going to start to rally, because you see the pain and suffering that investors have been dealing with on this stock. And it's like, man, when's this story going to be proven right or wrong? For example, Google. And I'm going to keep using that because it's very clear. A year and a half ago, ChatGPT is going to take down this massive, awesome business that is Alphabet, with its search dominance and its YouTube dominance and its cloud infrastructure business. It's got Waymo. It's got all these fantastic businesses. And now the market is like, whoa. AI's actually helped Google. They got this Gemini thing that's working really well. Everybody's using it. So the story completely changed on Google Alphabet, and now the stock's booming. Well, I think that's going to happen with software stocks. So we got to be really attentive. It may take, 3 months, 6 months, 12 months, 18 months. But when it starts to move, let's get all over it. Let me kick it over to Daryl.
So I'm looking at 5 years here and trying to find a long-term support and and resistance line, and it looks like this is pretty much it. So they last tested this value back in November of 2023, and they're coming down to test it again. So let me go into just 1 year now. And we can see they started on a downtrend, a primary downtrend, because we're looking at the 200-day when it started rolling over, and it is still decreasing. The 50-day, more of a midterm signal, is also decreasing. They're back down to that support line that we looked at in 2023 and a few other times where it touched. They did get very oversold. They're getting a little bounce today. I want to look at fast graphs real quick, because 23 and 24, they just got, in my opinion, got way overpriced. And if you're buying up here, you're taking a lot more risk than if you buy closer to fair value. So they were at fair value in November. That's a much less riskier place to buy if you believe in the company overall. But in general, when you're buying above fair value or even the normal market multiple that gets applied to the company, you're taking on a lot. This is ELF. I'm not even looking at the right company. I thought I looked it up already. Okay, here's Wix. They've been priced above their fair value for quite some time. So they're just now getting back to fair value. So I think this is probably what you're seeing here, is it got back to fair value after being priced just way too high for 2 or 3 years.
Nicely done, sir. All right. And staying in the software space, we're going to talk about Monday. Monday provides software that helps companies do, I think, the back office processing, a lot like Intuit. So that's what it does as a business. It's a small cap, $6.68 billion, revenues of $1.17 billion. Forward P is 29. Analysts think high discount, similar to Wix. Just gotten hammered. And let's take a look at some of the fundamentals. Is this an attractive business? Is this the kind of business I want to be a part of? Absolutely. High revenue growth, 28.6%. Is it profitable? You betcha. 89% gross margins, 28.6% free cash flow. That's awesome. That is awesome numbers. These are awesome numbers. So the balance sheet looks good. Let's look at the forecast. So is this AI paradigm, is it taking the Monday business and putting it through the meat grinder? And the answer is no. 2026 growth, 21.4, 20%, 18.6%. These are really good growth numbers. Profitability expanding, P ratio dropping to the teens over the course of 2 years. So this business, like Wix, and again, we've got like 25 businesses that looks like this. These businesses are discounted. So we got to monitor the story of AI. And again, when will the conclusion be made whether AI is going to hurt these businesses, not affect these businesses, or even help these businesses? Because AI, if you have software development costs going down, but you have a business like Monday or Intuit as an example, Intuit's market share is fantastic. We're getting into tax season. You'll see how many people are going to use TurboTax. Well, if you're going to have AI lower the cost of producing great software for Intuit, you're just going to make them more profitable. I'm signing up for that. That's why I'm an Intuit stockholder. I'm not a stockholder on Monday because I'd rather own Intuit. Very, very proven company, awesome business. But these guys are discounted by 49%. Monday Fortnite.com is right there with Wix. It's right there with a lot of software businesses that is just super discounted. So we got to keep monitoring to see when the market is going to conclude whether software stocks are going to get disrupted or not. I believe they're not going to be disrupted. I actually think AI is going to help them. They're going to create new products. But we're just going to have to wait because the market could stay irrational for a long time. So we got to play it right. We got to listen to guys like Daryl who look at the setups. Speaking of which, can you tell us about Monday? Tell us how it's setting up.
Yeah, so I finally sold out of this when I couldn't take it anymore because I think it's still going to continue drifting downward, and I'll keep watching the chart and see when things reverse a bit. The last time we looked at this, we were looking at a trend channel that went all the way back to 2022. It had done a very good job of trading more towards the upper side of that trend channel. It came down and got to the middle of the trend channel, and then it started drifting downward, and it finally fell out of the trend channel. I'm going to just go to a year now. So it finally fell out of that trend channel. So this become reminiscent of Nike. Nike had a 20-year trend channel, and it fell out of it and has not really looked back since. So this one's been out of the trend channel since the 12th of August, and there's been a few head fakes along the way, but I think this one is still going down. They have this downtrend line. They've tested a few times. They found support there a little bit. It is trying to come off of that. I'm not for sure it's completed yet. 21 days declining, 50 days declining, 200 days declining. It's oversold. It's been in pretty much negative territory on the PPO since the 11th of July. Hasn't got above 60 for an RSI since the 11th of June. I do have these Fibonacci levels over here. So it's currently set to the low that we saw on the 20th of January and the high that we saw back on the 27th of June. And each one of these Fibonacci retracement lines are going to be some point of resistance along the way. So when we do start moving up, those will be important to watch along with the moving averages. So I've sold this one. I'm out of it for now. I'll keep watching the chart, but I don't want to suffer any more pain on this one. It was a small position anyway, but I'm not riding it down.
Well, once it starts to work, let's write it up together. But
Yep,
let's
there you
monitor it
go.
because I'm like you, where I don't like my capital just sitting around doing nothing. Right? I need my capital to keep working, increasing my wealth. That's why I play this game. That's why I invest and put so much time and energy into it. Is I want to get into stocks at the right time. Now, software is going to be a great space to make money, but we got to make it. You got to buy at the right times. And right now, it continues to get hammered. We're having a good day, but let's not get carried away, folks. Let's not get carried away. We got companies that are awesome businesses like ServiceNow that is under pressure. 41% drawdown on the stock, $136 billion market cap. Its forward P 33.8. Analysts think highly discounted. This is a nice growing business, 21% growth on a $12.6 billion business. Now, ServiceNow I'm very familiar with. They do what I classify as they're in the service part of software. And they started back in the day when you had IT departments or anybody who really needed a support ticket, they would put it into the ServiceNow platform. And that grew into other aspects of service. And they do their piece really, really well. Nicely done. Now, AI, their CEO Bill McDermott early on said AI is going to be a huge opportunity for us. We're going to be able to provide a really nice AI platform for their customers to use AI and lower their cost of providing service and doing things like that. Move some workflows that right now involve people, move them over to where AI agents are going to be able to do those processes and lower the cost of doing business for their clients. Overall, it's a good cash flow generating business. This is a fantastic gross margin business. It's profitable. Everything is there. Now, the market thinks again, is AI gonna take revenues away from ServiceNow? Is it gonna take ServiceNow and make it obsolete? Is ChatGPT gonna handle all your service requests? Well, not so fast, because you don't want your data to be out there in the public internet. Let's say you have bill of material data there. You got some secrets to how you create your product. Well, you don't want that out there to be publicly available. You'd be giving away your trade secrets. So instead, you want it in a secured database with a secured system like ServiceNow. And maybe you do use ServiceNow's AI, agentive AI, that would provide that service experience to that customer, that client that owns one of your products. And their install base shows that, hey, they own that product. So we can give them that agentic AI experience in a secured manner, right? So ServiceNow, in my opinion, will not be disrupted by AI. It'll be helped. And in fact, analysts think it's going to keep growing in 2026 by 18.47%. Its profits are going to expand by 18%. Its P ratio is coming down. It's going to come down to 5 eventually. Now, this is probably a bad data set here, right? A bad data series, because that just looks out of whack. I'm not going to believe it. So, but I am going to believe this revenue growth, because they've been putting up just fantastic numbers. When are they going to announce their earnings? They're going to announce them on January 28th. So we're within striking distance here. We're going to see them announce their earnings on 28th. What day of the week is that going to be? That's a Wednesday, right? So that's going to be a big day. Is that big day Wednesday? Big day Wednesday is when we're going to have Microsoft, Meta, Tesla, ServiceNow, IBM. We got, like, I don't know, well over $10 trillion of market cap being announced on Wednesday. So if Daryl and I would like to do a watch party, it's going to be like, like that music festival where you got 3 really good bands that are going to play. It's going to be that kind of watch party, I hope. So tune in on Wednesday, because you're going to see a lot of earnings drop. I think we're going to have to work a little overtime, Daryl. All right, ServiceNow over the 1 year, under a lot of pressure, but man, this is a fantastic opportunity. We got to wait for this market to get its act together when it comes to software companies, because I think it's wrong. I think these businesses are being discounted. I'm loaded up on software businesses, but I'm taking my time. I'm not like going, hey, I'm putting 100% into software stocks, because I may be waiting 6 months, 12 months, 18 months. So why don't I just wait for this to really start working? And I like to see like a nice trend up over the 1 month. Give me a little bit of confidence, see the storylines that are being addressed out there, and then add capital to these positions. I don't own ServiceNow. I'd rather own Salesforce. Nothing against ServiceNow. I like ServiceNow. I like their CEO. Their CEO is fantastic, but I'd rather own Salesforce. That's the stock that I own. Over to you, Daryl. What are you seeing on ServiceNow?
So we're looking at 5 years worth of data here. I have a support resistance line at around 120 and another one down around 93. We've been in a downtrend since the 30th of January. The became confirmed somewhere around August, because the 200 days started rolling over and heading down. So we had a kind of an early warning here, but the 200-day did finally confirm that we're in a downtrend. The 21-day is declining, the 50-day is declining, and the moving averages are completely in the inverse order they should be. I said back in November I expected it to come down and touch this support line at around 120. I think we got within about $3 of it. I still don't think that's out of the realm of possibility. We are oversold at the moment. PPO has been negative since the 11th of July. We are in distribution at the moment. Money flow is currently negative. Let me save this chart and then we'll look at the weekly view and see how it looks in the weekly view. So it's been on a sell signal since the 7th of July. Hasn't been able to get above 50 on the RSI since the 7th of July. So this one is not looking good at the moment. I think we still have some downward pressure.
Okay, I have a kind of, let's have a conversation here. And we just talked about 3 software stocks. So what would you want to see in the technicals that would tell you, okay, this stock is on an upward trend? It has begun an upward trend. Let's use ServiceNow as that kind of example. What do you want to see for it to start? That tells you, okay, we could be beginning a nice upward trend.
So the 5-day is beginning to turn over. It's still downward increasing. So that's a really short-term signal. It's only 5-day average. But that would be the first sign, is when it starts to roll over and the 5-day average starts moving up. And then 21-day is basically a month's worth of data. So you'd want to see that stop declining and reversing and starting to move up. 50-day is more 2 months. And then 200-day is almost a year, not quite a year. So that one's going to move the slowest. So if you're a fast reactor, you want to start watching these slower averages, wait for them to stop declining. That means you're probably not going to get the absolute bottom. I heard a good description on that the other day. If you're eating a hamburger, most people like the stuff in the middle. The bun is something to kind of hold everything that's in the middle. So think of the bun as the, top price, and the absolute low is the bottom bun. So the best stuff is in the middle. So don't worry about trying to catch the absolute bottom. You'll drive yourself crazy. Wait till it gets back up to the meat and the pickles and onions and all that good stuff. So that's what these 20-day and 50-day moving averages are doing.
Yeah, and just to add on to that, the finding that perfect bottom is tough, and you may think you're finding the perfect bottom, and then it goes down even further.
Yep.
So I'd rather show up a little late to that really cool party. It's been going on for an hour. It's really been, fun. But the party is going to go on for another 6 hours. Nothing wrong with showing up a little late. You're still going to have a good time. You're still going to listen to great music. And now back to stocks. The software space is so discounted. It's going to move, in my opinion, for like 2 years. It's going to move up. It's going to rally higher. We're going to see these stocks, if they're successful with their AI businesses, they're going to double in value over the course of a year, 2 years. So showing up a little late and maybe looking at it and saying, wow, the stocks move 10% higher and I missed the first 10% move. No problem. Stick around for the next 80% move. So that's how I'm seeing it. Looks like you're opening up your options play here.
Oh, I didn't realize I was still sharing. I'm
Oh, sorry,
sorry.
sorry.
Let's talk about Intel for a second while I'm doing that.
Let's do it because I've been frustrated with Intel so much.
So they're down
Oh, man.
14% right now.
Yeah,
And
that's the Intel that I remember.
yep, I sold this on Monday. I actually bought a 55 put, which was right at the money. Just I think they were trading around 52, but this was the nearest in the money put that I could buy. And then to offset the price that I was paying, I sold the 39 put. So that puts me on the hook to buy Intel at 39 if it gets to 39, which I'm not going to let it go that long. So because of the 15% price drop now, my profit basically in 2 or 3 days, that's Monday, so it's been 5 days, is just since they posted their earnings yesterday, is a profit of $680 if I sold them right now.
Nice.
Yep, so that was a good play. The charts were not telling me to do that. That was just I could not believe what I was seeing Intel doing. So that's why I did that.
All right. Sounds good. Let me get back to my screen. So the market is trading a little higher and some stocks that are looking good. Nvidia moving higher. Looks like Fall's Grave is on. Okay, we got a request for you, sir. Can you set up NVO?
You bet. I kept wanting to talk about that one and kept forgetting about it. This is not you want to share or let
Yeah,
me
me.
share?
Okay, you're already ready to go, man.
Yep.
I was going to give you a few minutes.
So this is a good example of the question that you asked me. If you were buying it up here because you thought that was as low as it could go, I
Uh-huh.
mean, it obviously was not as low as it could go. So we had these downtrend lines. The 200-day was declining, the 50-day was declining, but here we finally reversed. So we had this shorter term downtrend. We broke above that. In retrospect, that was a good place to buy, but it was risky. So you'd have to keep a tight stop loss on it. The 50-day was still declining, but notice how the 50-day starts to move back upward. When it does that, that becomes a really good price, not necessarily down here, even though that would have been the absolute best price. You don't know that in retrospect. But when that 50 days starts increasing, this becomes what I would consider less risky than buying it right here. So it's moving upward now. If you bought it there, then I mean you're still up 20%. You're not up 38%, but you took a lot less risk buying it here than you did down here. So now it's broken out above this longer term trend line, and it's broken out above a 200, this longer term downtrend, and it's above the 200, which is still decreasing, but it's flattening out. So I think Novo, after talking about it for months, being in a downturn, that it is finally moving back into a good buy zone. The PPO told us it was a buy back in the 18th of November. The RSI started moving above the 50 and holding the 40 line, probably right around, I would say about the 1st of November, end of November, 1st of December. So with those two signals, I don't own this one. It's not one that I follow other
I
than
I just
the
bought the stock, Daryl. I've
yeah,
owned it for
I
1 minute.
yep, I think you made a good choice. So these 2
I've been watching
signals
this stock. This is exactly like we were talking software,
yep,
and you're seeing these companies with very good fundamentals. It's like a good business. It's like, geez, what's wrong with this picture? Why is the stock market selling this thing off so bad?
yep,
And what we were talking about, like, hey, I'm showing up to the party a little late. The stock's up like 25, 27% since it's low. All right, I didn't time it perfect, but guess what? I want to make money. I'm going to make some money on Nova Nordisk, I believe,
yep,
and I'm
I
going to
think
dollar
you will
cost
too.
average in. I just started a position. I'm a dollar cost average guy, and I'm going to start buying into Nova Nordisk.
Yep. So we did have these 2 signals that were saying this was a good buy spot. I just think it was risky, and if you did do that, just watch your stop losses so you don't take a big drop. The risk is a lot less now than it was the end of November. Let's take a look at the weekly view. So I bet that's going to look really good as well. We actually got a buy signal in the weekly view in the middle of December, and we broke above the 50 line on the 50 line on the RSI the 5th of January. So that would have been a confirmation of this buy signal here. And look at the accumulation. We're looking at 3 years worth of data, and accumulation is at a 3-year high. This is a good, if you want in this one, this is pretty less risk, less risky than it was.
I agree. I agree. So Novo Nordisk, right? We know what they do. They're a pharmaceutical company. They are successful predominantly with their weight loss drugs. They carry a very good balance sheet. Just a lot of good things to it. The thing that was weird was Eli Lilly's just been going higher while Novo Nordisk has just been left out, with last week's garbage. So that's been somewhat unusual. And now you see how much the stock has dropped from $140 a share down to 45. So if this thing goes up, and this could be a long-term hold for me because it's such a good business. It's a $277 billion market cap company. P/E ratio is 18.5. And its growth had slowed, but I think it's going to pick up going forward. Um, So this is the slow year. It's going to pick up going forward as some of its drugs hit the market. And there are some opportunities with big pharma, and big pharma hasn't in general been bid up like technology. So this one here is a good pickup. We'll see how it does.
Let me
Um,
show my screen once more if you
sure.
don't mind. So here's another really good example of when you're buying when it's really far above its fair value and its normal market multiple. So this is what the market typically applies based on the earnings to this particular company. When it gets this far extended above its normal and its fair value, and this is why I had no interest in it because it was way too overvalued for what they were giving you. And finally, the market pulled the rug out from underneath your feet, and it's back to fair value. This is a good place to be buying, not here. If you're a long-term investor, if you're playing, daily or weekly, you can play this all you want. But if you're a long-term investor, got to keep an eye on these when it gets just too far extended above its price.
All right. So let's talk about Dave. Dave's a new financial services company. I like their business. I like that they're creating products that I think fit to the way people like to use. I think online services, including financial services. And the thing that is caused me to just pause is the fact that from May to where we're at now, this thing's pretty much gone sideways. The market is like, don't know which way, don't know which way this one's going to go. Now the fundamentals look good. This is a highly discounted stock, 2.48 billion. And what's interesting on a date like today, the the financial space is getting shellacked, just getting beat up. Very little green out there. Robinhood's up. That's good. So this thing's getting beat up. Now I like financial. I really like new generation financials. And Dave was on my, I think I want to buy it list. And if you're I know you are, Mike, you've got access to the super investor terminal. I moved it from, I want to buy this stock to, I just want to watch it and maybe buy it. And this is the main concern I have. The other things around the stock, I love, Dave. I love their business. I love their um, valuation. Valuation looks terrific. It's just back to the party, right? When's the party going to start? If the party's going to start at 11 p.m., I'm not going to show up at 7. I'm going to be sitting around for 4 hours. More, applying it to my capital. If I show up to this party, is my capital going to be sitting around? Right. Well, I think we're in an expensive market, so I got to be careful. And I'd love to hear what Daryl has to say on Dave, but I think that answers your question, Mike. So let me kick it over to Daryl. Love to hear what you have to say on Dave, and then I'm gonna give you my follow-up question in advance. What do you want to see that would make you believe that, hey, Dave has started an upward trend or a downward trend?
Okay, so once they get to a price level, they tend to stay at that price level for quite a while. So back in 2024, they got to a price level and basically traded sideways. That was March of 2024 all the way till the 6th of November. And then they went on a 130% price run in a very short period of time. They got to a new price level and stayed there from November of 2024 until May of this year. And then they broke out once more and went up 105%. And then you're looking at sideways action since the end of May until now. I just extended this bar. Last time we looked at it was about right here. So I just extended that bar, and that bar still fits the data. So you have to
I
be
don't see
ready.
this kind of chart all that often. Like this kind of step up. Do you see it often? Is this like usual, unusual?
NVIDIA did it.
Okay.
ETR has a chart like this. So they do happen. You got, okay, this price run from here to here took what, 2 months, 3 months? These other ones, it looks like they were, 2 weeks. You got to be ready to pull the trigger. This one was more of a month, but you got to be ready to catch that run there. At least the last two have been very rapid. So other than that, it just sits for months on end. So, so what would I look for? And these are hard. And when you're looking at it and you have all the future data, it's a no-brainer. When you're looking at it and you don't have any future data, it's a lot harder. But let's look at it in retrospect. And we saw a PPO. The PPO fired on the 7th of November. So if you'd have bought it there and just ran it up to the middle of that channel, that's 109%. So you have to be ready when you see these indicators fire a signal, and then you may want confirmation. Do I just want only the PPO? Because sometimes you can get a little bit of a head fake. Here's one that went up and you went up just a little bit and then it immediately turned around. But if you're looking at this signal and it crosses above and it's in positive territory, you're probably going to have a pretty good run. So that's one signal. Then you look at the RSI and say, is that confirming this signal? And once it got above 50, then you could say, yep, that's a confirmation. And so that actually fired first on the 6th, and this one was more the 7th. So on the 6th and 7th, you had one signal fire. The next day, the second signal fired, and look at the accumulation, how it shot up. So anyway, you have to be ready. I mean, I don't watch signals like this that closely, but that's what I would be looking for if I was playing this one. I don't, although I like 105% gains, this does not make me very comfortable. I don't like sitting around waiting for them. So that's just me. If you're one to do that, just keep an eye on these RSIs and the PPO, because when they fire, this one you got a little bit of an earlier signal. So it stayed in that range for at least 6 weeks after these fired. But you could have bought here. You did have confirmation on the RSI, and it took a full 6 weeks for this run to complete. So, if I was trading like that, that's what I would be looking for on one that has, a chart pattern like this that runs very quickly in a short period of time.
And I'm like 80% there on buying Dave, by the way. I like their fundamentals. I like their business. I like their profitability. So I'm pretty close. It does not going to take much more for me to buy and establish a position. All right, let's talk a little eToro. This is a new issuance that came out less than a year ago. And let's see here. Yeah, it came out May of 25. And oftentimes, IPOs tend to do this. Now, eToro has kind of been not getting a lot of love from the stock market, just selling it off. The fundamentals look really good. $2.6 billion market cap, super small market cap. And its forward PE is 13. It is a growing company based on top line revenue growth. And analysts think it's big discount, 94.65. Looking at their numbers, a good reason why I like holding off on jumping in too soon on IPOs is, and this company in particular is going to announce earnings again on February 17th, is it gives me more data and able to establish trends. Where's this thing going? Is it growing? How's it operating? Is it profitable? And it's supposed to be a growing stock, 9% and then 10%. Now, it's going to be based on trade volumes here. If investors are buying more stocks, crypto, and so forth on the eToro platform, then these guys are going to really do well. I think it's a good business. It's just a little early. The valuation on it's really good. eToro is discounted. Let me take a look at that. $60 discount. Just a really good discounted stock. Now, Robinhood has been an absolute winning stock. Charles Schwab, Interactive Brokers, Futu. These stocks have way outperformed, like 100% rate of appreciation minimum of the list I just called out, and some of them are doing even better. eToro is in that pack of businesses. They focus primarily in Europe, which is a good market. So I think Toro's looking really good. I just need it to kind of get a little more mature, more information from the earnings. What do you think about eToro, Daryl?
They're in a downtrend as well. 50 days declining, 21 days declining. They don't have a 200-day yet. They're too new. So we have these two downtrend lines. One of the things I would be looking for is it to break above these and sustain some levels for 2 or 3 days. I'd like to see that 21 days stop declining. They were overbought for since the beginning of January, all the way until basically the 22nd. They moved out of oversold territory. I think I said overbought, I meant oversold. So the RSI is starting to move back higher, but it's not showing what I would call strength yet. The PPO is getting ready to do a crossover. So I would wait for the 21 day to really start increasing. You're going to be a little late. If you want to do it a little earlier, wait for this crossover, wait for this to get at least above 40. Enter a position, keep a tight stop loss, move your stop losses up if it continues to go higher until you can break out of this downtrend and, resume an uptrend, because it has definitely been in a downtrend since the June of last year.
Sounds good. Let me get out of this screen here. All right. Very good. Very good stream today, sir. Thank you for joining me. Looks like the market's trading higher on the S&P, the NASDAQ. And I think Intel is the one that's keeping the Dow down. The Dow is what, 30 stocks? Is that right?
Yep.
And Intel,
And
I
it's
think,
price weighted.
Yeah. So looking at the heat map, interesting day. Some stocks are doing well, some stocks are lagging. Looks like service now. We talked about service now. It's up 3.3%. Woohoo. We've got Netflix trading higher. Go Meta. You keep running. Amazon running up. I had a comment on the Discord yesterday on Amazon. So energy complex is doing well. Okay, good. All right. Great stream, Daryl. It always is super interesting to listen to you. And I get a lot out of your analysis. Thank you very much, sir.
You're welcome. My pleasure.
Yeah. And anything going on with your channel you want to mention?
Yeah, I can share what I've done. So I did put out the earnings preview on Citi, Johnson & Johnson. This is a weekly review of interesting charts from my portfolio, and I do this same exact kind of analysis and also the decisions that I'm making on those. So I mentioned in this past week that I was going to close out Qualcomm while I still had a profit. It is starting to make a little bit of reversal, but I don't think it's quite over. So that's just an example of what I do. This was a long one because the market was doing somewhat of a rotation. So I wanted to show a good market overview and why I thought we were seeing that. And then a new company. This is an IPO, which I rarely step into early, but this one I think has a really good story behind them. And then we have RTX, UPS, UNH, AT&T, Microsoft, Altria, LyondellBasell, and Chevron that are all reporting next week. So I will be putting out earnings previews, either as a reel or an actual video. The videos take a lot more time than the reels, but I'll at least put out, do I see strength in the charts? What's the implied move? So anyway, all that information is shared there. So you can be expecting videos on those this week.
All right, perfect. All right, so that is our show for today. As we depart, just taking a quick glance, it looks like energy is the best performing sector. Technology, number 2. NVIDIA's doing well today, as well as some others like AMD. Communications, discretionary. And then the ones that are lagging, utilities are lagging, healthcare is lagging, financials are lagging a lot, and then industrials are lagging. So that's where we're at. We are an hour and a half into trading. Good luck, everybody, with your trades. Thanks so much for tuning in. Really good stream. And we got next week. It's the final week of investing next week. And let's close it out on the positive. And we'll stream a couple of times next week. I'll figure out what is going to work for Daryl, and we'll put that on the calendar. Everybody, thanks again for tuning in. Good luck with your trades, and we will catch you on the next live stream.